Hello everyone, I'm Nova Lui, Head of Investor Advisory at RHB Bank, and welcome to our monthly Investment Insight podcast. October has been an exceptionally dynamic month with significant developments such as China's stimulus plan, Malaysia's budget announcement, and preparations for the upcoming elections in the US and Japan market. In particular, China's regulatory bodies and government rolled out a series of stimulus measures which helped boost the Chinese equity market ahead of the Golden Week holiday. From mid-September, Chinese equity indices surged by 30 to 50% within a month, driven by rate cuts, property stimulus efforts, and affordable loans supporting share buybacks. However, after the Golden Week holiday, the rally cooled and we have seen a downward trend, although indices remain above mid-September levels. We have created a dedicated podcast diving deeper into the specific stimulus plans that fuel the Chinese equity rally. Be sure to check it out by scanning the QR code. With waning buying interest in the equity market, Beijing has pledged to significantly increase debt to boost its struggling economy. However, the absence of specifics around the total size of this stimulus package has left investors uncertain, making it difficult to assess how sustainable the recent stock market rally might be. After some disappointing import and export data, the Chinese equity market remained relatively flat throughout the later part of October. However, overall market sentiment remains optimistic, with exceptions that China will achieve its target GDP growth for the year. Shifting our focus back to the developed market, the US equity market has shown a broadening rally. In Q3, the broader S&P 500 outperformed the Nasdaq index, reinforcing our view that the US equity rally is expanding across different sectors and beyond the Magnificent Seven within the technology sector. The outperformance of S&P 500 is more obvious in the recent quarterly performance. Companies outside of Magnificent Seven have also performed well. Example Micron, which has benefited from the generative AI momentum, a trend we believe represents a long-term structural shift. Although the US Fed implemented its first rate cut in September, Federal Reserve policymakers remain divided on the pace and extent of future cuts. This ongoing uncertainty has led markets to continually adjust expectations for additional rate cuts throughout the remainder of the year. With the US election approaching on November 5th, investors are primarily focused on company profitability rather than which party would win the election. Malaysia continues to extract strong interest in foreign direct investment and able to secure bilateral trade deals. Malaysia is now recognized as one of the 13 partner nations officially added to BRICS, a bloc that collectively contributes 1/5 of global trade. BRICS represent about 40% of the global population and account for a cumulative gross domestic production of US 26.6 trillion, or 26% of the world GDP, nearly matching the economic strength of the group of 7, which is the G7. The main focus for Malaysian equity market has been the 2025 budget announcement. We have prepared a dedicated podcast where we discuss RHB's detailed insight on the budget. Be sure to check it out by scanning the QR code. Overall, investors reacted cautiously to the budget 2025 announcement, with limited buying interest leading the KLCI index to decline for more than a week. Foreign investors reverted to a selling stance, net offloading ringgit 196.2 million worth of equities on Bursa Malaysia. Weakness in KLCI also reflect other contributing factors such as the upcoming US election and the escalating conflict in the Middle East. One of the major concerns raised was the removal of RON95 subsidies, which were announced during the budget to be cut for T15 income earners. Recent news indicates that the government is now considering cutting subsidies only for T10 income earners. Overall, we remain positive outlook on riskier assets, considering the global trend towards easing monetary policy. As long as the economy avoids recessionary pressure, rate cuts are generally beneficial for equity markets. While China's major stimulus announcements have boosted view on the Chinese and broader Asian market, we advise investors to remain cautious and maintain a well-diversified portfolio. Regarding the Malaysian equity market, we need to closely monitor the rollout of the policy announced in the Budget 2025. We remain optimistic about the Malaysian market and recommend that investors focus on income or dividend-based strategy for both global and local investment to navigate potential volatility in the coming months. Be sure to check out our fund discovery idea for Q4 and stay updated with our latest insight on the RHB Merge website. We look forward to connecting again in our next podcast series.